Hi, this is Mike, and in this video I want to share with you how your Social Security is taxed. Now, the thing you have to remember is that there are two different numbers, two different sets of numbers, two different equations. If you are single, the numbers are 25,000 and 34,000. Now, if you're married, those numbers are a little different. The numbers you want to know about are, the first one is 32,000 and the next is 44,000. So the reason those numbers are important is because those are the numbers that identify to what degree you pay tax on your Social Security. All right, so the first set of numbers represents 50%, meaning half of your Social Security is taxed. The second set of numbers, 85%. So up to 85% of your Social Security is taxed. Now, this is going to be general rule of thumb. You certainly want to look at your tax return and talk to your tax professional to get the exact numbers. These are general rules of thumb. So, how do you get to these numbers and how do they apply to you? Well, if you take a look at your tax return, take 1/2 of your Social Security income. So take half. So if your Social Security income is $24,000 a year, take half of that. That's $12,000. To that number, you basically add all other income. So if it's on your tax return, everything on the front page of your tax return is added to half of your Social Security income. And whatever the result is, you would then compare them to those previous numbers. So let's imagine that you've got some pension and you've got some dividend income. Maybe you have some IRA income. All of those are included here when calculating how much of your Social Security is taxable. Now let me give you a quick thought here. When I say all other income, there are 3 exceptions. So these are the exceptions. Number 1, any income you get from a reverse mortgage, that does not count against your Social Security income. Number 2, any income that you get from a life insurance policy, life insurance withdrawals and loans. Those are also not normally included. And the third one, Roth IRA income. Also not included. So reverse mortgages, life insurance, Roth IRAs, those are not included when calculating tax on your Social Security. By the way, what is included? The interest that you earn on municipal bonds. So you think muni bonds are tax-free? The interest actually is included, counts against you when it comes time to figure out how much tax is on your Social Security. So there you go. That's how you get paid tax on your Social Security.